Financial Planner, Flow on YouTube.
Rick, I feel like myself as an investor, I've been conditioned as of lately, and I've been getting a lot of emails about this, regarding gold. Gold has just been, hard to get excited about because it has this tendency to go down if nothing exciting is happening. Now, obviously, it's done well, and right now we're seeing it strongly over 1,300. But I guess when there's nothing going on, it's almost as if there's slippage in the gold market. So I just want to kind of get your thoughts on this, and maybe you can set us straight on this path.
I don't know if I can set you straight, but I think it has a lot to do with orientation. I think if you speculate in gold stocks. If you invest in gold. Gold, for me, has been purchasing power protection. I'm in the odd position of owning a lot of it after all of these years and hoping it goes down in price. The thing that makes gold go up in price is crisis, and at 64, I'm not looking forward to crisis. I buy gold because it protects my purchasing power. When people say to me that gold has performed poorly, I sort of scratch my head. I think back to, say, the year 2000, when gold was at $260 an ounce. And I think of it now at $1,300, and I try and figure out what part of the move from $260 to $1,300 feels poor. Was it the fact that it went to $1,800 and then came back? The truth is, for me, gold represents an extremely good form of liquidity. Liquidity that's non-correlated to other forms of liquidity. It forms a function, I guess, of crisis insurance and allows me to sleep better. So from my point of view, it's fulfilled its role very, very well. For those people who believe that they can call the moves in gold hour by hour or day by day or week by week or month by month, I suspect they will all ultimately end up in a sanitarium. For me, gold helps me sleep nights and stay calm. It's done a wonderful job.
Well, yes, it has a 5,000-year-long history or more of protecting people's wealth and just being a store of value. So I totally agree with you on that. And I guess maybe it's the mining shares. Maybe people, and maybe myself, am guilty of this, associating the mining shares with gold and maybe getting in at the wrong times, and that's what's been difficult for people weathering the moves in gold. And so let's talk about that a little bit. As far as
that's a great subject. Again, it has to do with managing your expectations. The fact that gold is up reasonably well over the course of the last year, while the gold stocks are down, to me makes the gold stocks attractive. Low valuations, in other words, bear markets, or at least soft markets, were they involved in consumer goods, would be called sales. So think from a buyer's point of view, what part of a sale is wrong? It's only bad if you're nervous about the value of the inventory that you sell, that you have in your possession, pardon me. In other words, lower prices are only problematic for you to the extent that you don't have faith in your own portfolio. And in that case, you should sell your portfolio and reinvest it in stocks that you think are cheap. The fact that the gold stocks are off over the last 12 months, while gold has remained strong, make the gold stocks seem attractive, not unattractive to me. I'm very positive on the outlook for the gold stocks. Frankly, more positive than I am on the outlook for gold. Precisely because they've lagged.
Sure. One of the words that I've heard you use a number of times, and maybe you've made it popular among us as the resource community here, is capitulation. And maybe you could just, as far as giving us an idea of where we are, when do you believe capitulation took place? And for those of us who recently learned about what that means, basically people selling their shares at whatever price, losing all faith in the sector. So when did this take place, and where does that put us now in terms of more buyers coming into the market than there are sellers.
Interestingly, in my view, the last real capitulation that we had was in the year 2000. I had been hoping for capitulation in 2015, but we didn't get to capitulation. What we got was a situation where the market caps of the mining stocks became small and that they had been attracted into strong hands so that there was no need for capitulation. The move that we saw in 2016, that dramatic move that saw the junior gold stocks up 100%, didn't have to do with a resolution of capitulation. It had to do with the fact that the selling finally gave out. You will remember in the first part of 2015, the stocks moved up, and they moved up fairly dramatically, but on low volume. What that meant was that the existing holders were fairly strong, and the selling evaporated, which allowed the markets to move up. By May of 2015, you'll recall that the price action in the stocks meant that the momentum players came in and the volumes got stronger until, of course, the stocks collapsed at the end of 2016 of their own weight. 2017 was what you would want to see in a market. You want to see a market back and fill. It's very healthy. It's very normal. Every bull market that I have seen, you have seen several bear market retrenchments, going all the way back to 1975, when that greatest of all gold bull markets witnessed a 50% retrenchment. So what you're seeing in 2017 is an important part of the base building for a continued bull market in gold and gold equities.
So, and maybe you can shed some light on this. As far as the last move we've seen in gold, with it going from, I don't know where you want to call it, 1250 to now over 1300, I guess we haven't seen a major leveraged move in the miners, at least some of the stocks that I follow. But could it be said that that's the remnants of people selling into some of the gold's renewed strength? And if we get a little more of a move in gold, we'll start to get that momentum coming into these stocks? Is that kind of how this, and that's kind of what you described back in 2016. Is that what you're seeing right now?
I don't think so. I think the move that we've seen in gold, 3-4%, is irrelevant. I think that's a function of the gold market inhaling and exhaling. It's something that gets people excited. I guess I would say it's interesting rather than relevant. The move that I'm looking for in gold is a move from 1,300 to 2,000. And that would get gold stocks moving in earnest.
Sure.
But I don't think that we need the move to 2,000. I think what you're beginning to see in the gold stocks that we haven't seen for 30 years is more important, actually. It's called corporate performance. You're starting to see major mining companies make capital allocation decisions on a rational basis. You are starting to see rational exploration expenditure. You are seeing the outcome of 20 years of deferred exploration and sustaining capital investments. You're seeing circumstances where discoveries get taken over at very high premium. What you are seeing is the emergence of the gold mining industry as an actual industry rather than as a leveraged call on gold. In my fondest dreams, two things happen. This progress completes, meaning that investors can differentiate between good teams and good projects and all the dross that calls themselves gold stocks at the same time that the gold moves. That same virtuous circle that we saw in the beginning of the decade of the 1970s. And my suspicion is, it's only a suspicion, my suspicion is that circumstance may come to pass.
Well, good words there, and that was a great update on the precious metals market, and I appreciate your expertise. And that's actually a perfect segue into the second part of this interview that I wanted to touch on with you, because you've been through some different cycles, and you just have a long history of paying attention, and you're a smart guy. And one of the things we cover a lot here at Crush the Street is cryptocurrencies, specifically Bitcoin, and this is I don't know if you consider it a currency or not, This currency is now worth over $70 billion. It's in its current market cap. And I mean, with this dramatic move up and just the way it came onto the scene here, obviously it doesn't have a 5,000-year-long history like gold does. But what's going on in your mind when you hear Bitcoin?
Well, Bitcoin to me is all positive. I'm a consumer of currencies. Currencies are a medium of exchange. And the more competing currencies there are, the better it is for consumers of currencies. I use US dollars, I use Canadian dollars, I use gold, I use silver, and from time to time I use Bitcoin. The more competing currency, the better the currency has to perform for the consumer. I'm a consumer. It's all good. I think that if you move beyond the discussion of cryptocurrencies to a discussion of the distributed ledger, the distributed ledger is perhaps finally the conjunction between information technology and the broader economy. It is a way that you take control of the ownership of assets, the transfer of assets, and the title of assets from governments and deliver them back to the market. That's truly revolutionary. It won't occur quickly. The fact that it's revolutionary doesn't mean that Bitcoin and all of the other cryptocurrencies will march ever onwards, ever upwards for all time. The truth is, a situation where 6 pimply-faced 21-year-olds in a garage can invent an algorithm and call it a currency and paint that algorithm with a narrative and turn it into money means that there will be an enormous proliferation of scams, just like there are in the penny stock business. And billions of dollars will be lost to narrative, unsupported narrative. That does not change the fact that cryptocurrencies, and more importantly, the distributed ledger, are not an extremely important factor in our time, and a factor that is absolutely for the good in aggregate.
Yeah, I've been so fascinated with what we've seen now with Bitcoin and the distributed ledger. And really what that offers is the future. I think it was Moore's Law where, you know, the information is doubling every year and a half and being cut in half every year and a half. And we're kind of getting to that point where we're wondering if that could continue to go on. And I've been telling people, man, with the invention of blockchain, there's just so much opportunity that is still yet to enter the space. And for me, I love that Bitcoin continues to prove itself, because back in 2009, 2010, when the first transaction took place, 10,000 Bitcoins bought a pizza. People had no way to value it. It was just completely random. And now at $4,700 Bitcoin, it's still the future. People still have to purchase it and have some confidence based on where it's potentially going. And that is still unknown, but I love that it continues to prove itself. I love what you said about it being an added competition to money, and really it puts the pressure on governments and central banks, which I think are all good for the average person, especially for people who lived in countries where there's massive amount of capital controls and they were able to get their money out using Bitcoin, like in Venezuela or Argentina or Cyprus. Here in the U.S., we enjoy a fairly stable standard of living, and we don't have to really worry about that to the extreme that these other people have. But it has been a great tool for people, and I think that's very exciting. So, Rick, any closing thoughts here, whether it comes to the mining shares, precious metals, or even cryptocurrencies? You know, what are you advising people now here in 2017?
Well, cryptocurrencies, first of all, I think when you mentioned Moore's Law, cryptocurrencies and the distributed ledger may be the conjunction of Moore's Law, which is increasingly efficient technology, and the network effect. In other words, you might get Moore's Law squared. That doesn't mean that Bitcoin continues to go up in price ad nauseum. It wouldn't surprise me at all to see Bitcoin fall in the context of US dollars by 60%. And it wouldn't change my opinion as to the efficacy of Bitcoin if it did.
Sure.
People need to manage their expectations, and they need to understand why they own it. Right now, Bitcoin is becoming less of a medium of exchange and more of a speculative narrative vehicle. I have seen the chart that Bitcoin exhibits right now many times in my life. And in almost every occasion, the backside of a J curve is just as steep as the front side of the J curve. Just not as much fun. What's interesting is that at $4,500, Bitcoin will seem more attractive to your listeners than it might at 1,000 after it fell from 4,500, despite the fact that at 1,000 it would be approximately 4 times as attractive, arithmetic.
Mm-hmm.
Explaining the gold stock market in the same context, the fact that the gold stocks were more exciting in 2016 than they have been in 2017 simply means that they were overpriced, and now they're reasonably priced. If you think about things in the 2 or 3 or 5 year perspective, it isn't good markets that are good, it's bad markets that are good. Good markets are only good if you acquired inventory in bad markets that you can spray into good markets. The old message is, of course, buy low, sell high. It's tough to make your head do that. Everybody wants to own Bitcoin when the narrative has been demonstrated by a J-curve chart already. In other words, where what the asset has to do has already been done. The art of the situation is to get involved in a trade before it takes place. I would argue that the upside in gold stocks was established in 2016, demonstration of what they can do. The fact that they've fallen often 50% in price while they have continued as corporations to generate value makes them much more exciting in 2017, half price, than they were at 2016, full price.
Mm. Yeah, no, I totally understand what you're saying. I totally agree with you on that. So, Rick, from just using your expertise, understanding how large the gold market is, stock market, different things, when it comes to Bitcoin, people have some crazy numbers, $500,000 projection per Bitcoin. John McAfee said that. Some people have said 1 million. They use facts like, hey, there's not enough Bitcoins out there for every millionaire in the world to own one. Now, and I'm looking at the same chart you are. Everyone is sitting on hundreds of percent gains, some in the thousands of percent. What is it, in your opinion, from an asset class, how high could it go if you have all this institutional money going into Bitcoin? And is it possible to see a Bitcoin market cap of $5 trillion, $10 trillion, in your opinion?
I don't know, but I also think it's possible to see the market cap go to zero if people lose faith in the algorithm. What happens in a market that goes from $450, where it was 2 years ago, to $4,500, is people only look in the future to the direction it's gone in the past. People need to understand that it's an algorithm. It's an instrument of faith. Could it go to 10,000? Yes. Could it go to 100,000? Yes. Could it go to zero? Yes. Keep both numbers in mind.
No, this is why I'm having you on, sir, because I really want to get an understanding of where we are, and I feel like your expertise, we're able to kind of get some insight of what we've seen in the past with the .com bubble or just other markets that have moved up and what we can expect going forward. So I appreciate your insight on that. And if people want to just get a little idea of where we are and closing thoughts on the gold market, precious metals, some closing thoughts on that.
Well, my favorite way to express my thoughts is individually. I would invite your listeners to ask me questions that I'm qualified to answer, which has to do with their own portfolios. If they would email me their individual resource stock portfolios to my email address, which is rrule, R-R-U-L-E, at sprottglobal.com, with both the names and the symbols of the stock, I will rank those stocks and return the rankings by email. That's the most direct form of communication that I can offer your listeners.